mark. Now, is it 1995 all over again? The specter of a government shutdown continues to loom over Capitol Hill. The 4th of March is the deadline for both parties to agree to a deal allowing short-term financing for the government. The Democrats want to extend the deadline to get in more negotiations. Some Republicans, though, insisting on big cuts before any kind of a deal is made. So what could happen if no deal is reached and the government shuts down? Well, here's a look back at what happened in 1995. There were delays in Social Security, Medicare, and veterans' checks. National museums and parks, they shut down. Hundreds of thousands of visa and passport applications went unprocessed. That was back in 1995. Joining us now is Nomi Prins, senior fellow at Demos and a former managing director at Goldman Sachs, to talk a little bit about how we should invest our money in this type of an environment. Nomi, it's good to see you. So the idea of the budget, first of all, I want to see your ideas in terms of what we should do to handle this budget. Then I want to ask about investing our money in this environment. But how do you think we should go about it, because there are only a couple weeks left in terms of getting the cuts in that are necessary?
Well, that's an excellent point, Connell. I think that first we have to recognize that these cuts that the Republicans were passing over the weekend and the Democrats have put in some of their cuts, etc., are really only a fraction of the entire budget to begin with. They're talking about less than half of 1%. And so the real issue ultimately remains, how do we get the economy back? How do we get the jobs back? How do we get revenue back into the government? And I think that has to be part of the discussion. So I would hope there's no government shutdown around this. I hope that there's either an extension or real discussion, that cuts have to be met with revenue coming into the government, because there has been a lot lost, certainly over the last couple of years.
And think about it from an investor's point of view, is that many industries over the last couple of years, their stock prices have gone up and they've become more attractive investments because they've been, for lack of a better term, propped up by the government. We've gone through all the stimulus measures and what have you. So maybe if that goes away, that changes your attitude towards investing, does it? And if so, who benefits and who loses in that type of an environment?
Well, I think that's true. We know that companies are also sitting on an awful lot of cash, and that's part of the reason why jobs aren't being created and why they're being conservative. So on the one hand, their stock prices are up, which increases their capital, which increases their cash base.
Right.
But on the other hand, they're not turning that around because of the uncertainty to them in this environment, and no real concrete ideas coming from Washington as to how to create jobs, not just stimulate, but create, physically have more people in the workforce providing revenue. So from an investment standpoint, that remains, the economy remains weak and uncertain. That's why this cash is being put aside. And so that's another reason why the commodities are continuing to rise. That's why we have gold going back up to their highs, silver over their 30-year highs, because in the event of a continued weak economy, a continued weak dollar, if the government takes away the money they're using to prop up corporations, or if the Fed comes in and buys more of our debt, more of our treasury assets, either of those are going to continue to weaken our dollar. And I think that's why investors should continue and are continuing to look at metals and at the commodity market.
Yeah, and you like those metals. The gold's up like $19 as we speak, as we showed. Nomi, thank you. Nomi Prins, former managing director at Goldman Sachs, with us today from out.